inside the RGL. So when we just look at an art trade narrative, assuming that V equals 1, in this case velocity, then of course we're looking at velocity. What's the formula for velocity? It's, say, distance over X amount of time. So we get this idea of this, what Jack was talking about, this idea that we want to make sure we understand what we're actually talking about, that velocity is not the same as acceleration. We're not talking about, this is velocity. This is a standard straight line linear velocity over time. That's why it's a straight line, and that's why it doesn't change whether we zoom in or zoom out of the chart. That line never changes its relationship. So this is something that is a static in the charts. What we want to try and recognize is the acceleration, because the acceleration, for an acceleration to take place, which is a change in the velocity, so velocity no longer equals 1 over time. You see the difference? Does everybody understand the difference between velocity and speed and acceleration? Is everybody clear about that? Yeah. So what we are looking for is we're looking for the acceleration. That's why it's called the art trade, the accelerated reverse trend line. So when V doesn't equal 1, either it's less than 1 or more than 1, then one of the key ideas here is there's got to be a reason for that taking place. There's got to be a reason. So when we understand that there's got to be a reason for that taking place, we can recognize that when it's V plus 1, which would be above, and V plus 1 when it's below, just keeping it the same idea. Well, we need to look in this area that is defined by the art line. So we need to look in that area as an RGL. We need to look into this area here as an RGL. We need to look into this area here as an RGL. And we need to look at those areas with a massive amount of interest, still without concluding anything just because it's an RGL, but with the basic idea that there is something that we want to be paying attention to. Because I think what's happening is that people are finding trades in the kind of remote, vague locations, and there's not really a trade there. You're seeing a trade when none exists, and that's giving you some real cause for concern at times. People are trying to find a deal, and it's just not forming enough. There's not enough elements coming into play at the same point. These are areas, these are price areas that not only are they at extreme price levels, but there is a change in the nature of the velocity. And there's got to be a reason for the change in the nature of velocity. This is not a sell trade, and this is not a buy trade, and this is not a sell trade. It's just a point of interest. And what we have to do here now is when we see that art trade, we've got to try and explain whether this is a buy trade or a sell trade. We've got to try and figure this out. We've now got to start doing a lot of work. We've got to figure out whether this is a buy trade here or a sell trade. We don't know what it is. We haven't got a clue what it is until we start looking, until we start diving into the idea of what is happening in this area, just like an RGL. An RGL isn't a buy or a sell. No RGL is a buy or a sell. An RGL is just a decision that may be a buy, that may be a sell, or which may actually be neither. It's not an either or. There is that third option that it might just be fair, in which case we have to develop out the next storyline, and then the next storyline, and then the next one. And obviously, as we go forward from each of these, we come up with brand new V equal 1 levels. You can see that this one here with this failed auction in the background, highest high between these failed auctions, we can start to draw another point of interest here. And we can draw from this point here, and we can say, right, well, we've got another one here we want to be paying attention to. And again, we simply come up with these V equal 1 kind of trade levels. We're not trying to make it look any more scientific than it is, but we are still trying to get you to understand that there is a reason for these price levels. It's called the RGLs. And when we know that there's an arrival rate when V equals greater than 1, equals an arrival rate, doesn't it? When V equals greater than 1, we would expect an arrival rate. What happens every time we get an arrival rate of at V equals greater than 1? Look at the volume. What happened when we got an arrival rate of V equals greater than 1 here? You see what happens? Look at the arrival rate. What happens when we get an arrival rate here of V equals greater than 1? So in other words, let me just get this absolutely clear. The three biggest volumes of the day in the individual sections, the biggest volume here, the biggest volume here, and the biggest volume here all came about at V equals greater than 1. Do you agree with that? And there's only 3 occasions, realistically, there's only 3 occasions where V was greater than 1. And on all 3 occasions, we got the arrival rate of massive volumes. So this tie-in between volumes and arrival rates, this tie-in between V equals greater than 1 and volume and the big decisions allows us to start saying to ourselves, well, these are the big decisions that I should try and get in front of. These are the big decisions that are going to direct traffic for the rest of my day, or at least for the rest of this swing. As traders, we can start developing ideas around this on the basis of the majority of these trades are going to be mean reversal type trades. So therefore, we can start thinking about box type reversals, and we can come up with a strategy for that. And if we just draw the box around the V, and obviously if we break through the box level, we can obviously look to try and trade measures against these ideas. And you can see that based on this box here, we got very, very close to the measure there. I think actually we got the measure on the box there. There's the top, there's the bottom. Yep, we got past the measure by a couple of ticks. So you were able to make a measured move on that and scratch out at 0. On this box trade here, you blew through the measure for a massive profit, massive profit. And for this box here, obviously once we broke the structure to the downside, you can see that we got a very, very easy profit out of the box. Now that's trading out of the box. That's, in other words, the RGL type trade. The question is, can we get inside the box? Can we go inside the box area here and figure out that they're going to use this to go long, or they're going to use this to go short, or they're going to use this to go long or short? Can we figure it out inside those key levels? And obviously the key to that is how many buyers are in this area here? How many sellers are in this area? What is the smart money doing in here? What are the book doing? What do we think the book should be doing? What are the components doing in these areas? Do we get a sense that the components help us with these decisions? Do we get a sense that the volatility price helps us with these decisions? So when we get a sense of what's happening, is there anybody that looks at the components and the volatility? So let's deal with the first box here, first of all, the first art trade box. Can we all agree that this looks like a fair value box? It's trading at a high, components are bullish, volatility is bullish. So as far as this trade is concerned, I would say that this looks like a fair value box trade, right? I don't see any reason to be long or short at that price. Can we agree on that? Yeah? Can we all agree when we come into this art trade box here that there is absolutely no reason to be short? So I can get rid of the short option here, and I can now just simply consider this as a outright buy trade opportunity inside that little area. So whether I buy it as part of the art trade, knowing that the art trade kicked off at 79.25, and through that phase there, I'm starting to look for my buy opportunity, knowing that this is the art trade, knowing that this is the art trade narrative, in that area, I might be able to find a good lean perhaps around about 75 quarters, 75 evens. Or I could simply take the trade at the Heisman at 81, 81 quarter. And obviously the takeaway from that trade, glorious. Is there anybody that looks at this art trade as a buy trade opportunity? Are you all screaming long at this point here? Yes or no? If we're not screaming long, what are we doing in here? We're selling the art trade, aren't we? So as a systematic trader, would you have sold here? And as a systematic trader, could you have sold here as well? Absolutely, right? So we could have sold there for the systematic trade, breaking through the 100 level. So we could have got short here and made some money and scratched out. We could have got short here, and then obviously we've kicked on a beautiful trade. But as a realistic idea, could we not have also have concluded that there was a very high probability that when we ran the sweep of the stops here, and then we touched V equals 1, which is almost the art trade, could we not have simply have started to say, well, if I could find a big fade in here, if I could find a big lean in here, I am taking this, and worst case scenario, I could trade this as a Heisman entry right there at 4 1/4. I'm going to trade this as a Heisman at 4 1/4, and all of a sudden we traded down into 88s, 16 points, and we're sitting on a $300 profit off of that top line sell. Nobody thinks this art trade here is a buy trade. At least nobody in this room thinks that this is a buy trade. Well, that's good news. It means that you're now thinking about where the trade is going to go to, how far is the trade likely to go. Yes, absolutely. We've now got a cap buyer, of course. We can all highlight this cap buyer in the background here, and we can do our measures against this. Of course we can. That's what we should be doing. Based on the structure, we can now recognize that this underlying storyline gives us a pretty impressive target price area down towards this area here, which is right into the meat of this art trade at the bottom edge here. So we can already start to recognize that into this area for the measured move, we can already recognize that that's a real opportunity to bag and tag up into this price area here. And we now have a brand new, because we've just pivoted here, we've now got a brand new V equals 0 line, or V equals 1 line. Yeah? The V equals 1 doesn't mean anything, guys. It's just the idea that the velocity is constant, right, through that phase. So we now know that the target price should be reached by 1506. We start having an idea about when we can expect to see these. And based on that storyline, we would now expect to think that this is likely to be the cap sell price in this area. So we're already starting to get in front of the right-hand edge of the chart now, aren't we? Can we agree on that? Can we start thinking about it that way? Now, obviously, are we going to buy the measure? No, I wouldn't be buying the measure move, would you? Absolutely not a chance. So in other words, we start recognizing that there's no way we're going to buy the measure unless something dramatic changes over the course of the next short while. So what we would actually like to see is we'd like to see some liquidity. We would maybe like to see another V equals 1 move to the upside. At the moment, this is what V equals 1 at this point. Well, it's actually just a straight flat line, but it is still the V equals 1 line for us on the short sell side of this book at the moment. So the good thing is we start considering our markets in maybe a little bit more of a mathematical way. Now, the reason why you might say, why are you not selling it yet? Well, because there's a very strong book buyer still in place on this NASDAQ at this point. So I don't like the sell at this point. So we obviously are now thinking about maybe this art trade price again, back at the 17,100 level. So that's what I'm thinking is I'm thinking 17,100. I'm watching the book. Very, very bullish book at the moment. I'm starting to see some Voltics showing up, but they're still going bid. They're not holding the offer side. And I'm still seeing a very, very strong pump on the book. The book's actually more bullish than it was at the high of the day here. The book is way through the top edges at the moment, in case you're wondering what I'm talking about when I'm looking at the book here. The book is so heavily stacked on the buy side. It is the highest, the biggest stack on the buy side we've seen today on the NASDAQ at this point. So it's very difficult to be selling this. Very difficult to be selling this. So we can obviously get rid of this cap seller because it wasn't a cap seller after all, and that's okay. We can do that. We're now watching this art trade at 17,100. We've now ran the swept liquidity at 17,100. I am trying to take some money out of this trade. I am going to put, I've been successful. I'm going to put my stops in at break even now. And that's me. I've got my trade done. That's it. I've got my trade done, right? So let's show you what I did. Let's show you what the storyline was on that bit of business. And let's see if we can all agree on that little bit of action there. So here's the trade. Did we all agree where the trade was? It was 17,100 break after we took out that little cycle there. And we're now looking at 17,100. Okay, so we've got that in our picture. You can see here that we've got a very strong buyer coming in here on the book, but take a look in the background. The book is a lot more bullish than it's ever been. So that's a real challenge now, isn't it? If they've stacked that many bids into this move higher, if they've stacked that many bids into this move higher here, I've got to be really, really concerned about what is going to happen next. Because by rights, I would imagine we should be trading day highs. So why did I sell it? Well, because very simply, I started to see the first sell coming in. Smart money is very short, but they're not selling to the buyers, are they? They might be very short, but they're not selling to these buyers. Look, the buyers came in here and the smart money went up, not down. So because of that, I still think that they're going to work this and they're going to take it back up and they're going to be looking for that liquidity. Now, remember what I said this morning. Can anybody remember what I said this morning? Liquidity, 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 yeah? I never actually said that, but something along those lines. The idea that liquidity in a day like today, a day like next week, for example, on Tuesday, Monday and Tuesday, there's going to be no liquidity in these days, right? So in other words, it's going to be incredibly important, very massively important for any trader anywhere to get liquidity. And where's the best liquidity? Where the V levels are. V equals 1. In other words, V equals 1 is where we're going to get liquidity. We're going to get that idea. So when we have a V equals 1 price here, we know that that's where they're going to try and get liquidity from. 17,100 is a place that they're going to try and get liquidity from. So my job is to try and make sure that I facilitate the move to those prices. I try and deal around those prices. I have taken a second sell, but guess what? I took the second sell. Why? What was I worried about? I was worried about the top edges. So where did I take my second sell on that trade? Certainly wasn't a top edge. But where you see I take the second sell makes a lot of sense now. Take a second sell at that price. Agreed? It looks like it's exactly the same trade. Well, it roughly is the same trade. It's not the same trade, but it looks like it's the same trade. But I just waited for the book on this occasion because that sell trade there, I actually scratched. There was a 5 stop right there, right? So we scratched out that trade for +1. Let it go up. I don't know how far it's going to go. The book suggests it's going to keep going higher, right? The book suggests that trade was at 1 1/4. That trade there was at 1 even. So you can see it's not the same trade, in case you're wondering. So we took the price up here. Quite easy. We took the price up. We don't know how far it's going to go. The book is still very bullish. I saw some buyers coming in here, and I was still seeing a little bit of interest from the smart money on the upside. So I'm careful not to jump too early into this. But when the book starts to sell off, I now want to try and put the tipping price in my favor. So that's about the tipping price. It comes back inside that Heisman trade area there. The buyers that bought the breakout here, they're now losing money. So they're going to get put under a lot of pressure very soon. So I can take advantage of that knowledge and I can take an easy swing back toward the downside. And that's what we did. Took an easy swing back toward the downside. And there it is. There's your liquidity level there. I paid 1 1/4 for the trade, which is right there. And that's me. I've now in the short sell. I've given it a bit of space. I haven't been trampled by the runaway train here. I've simply just been careful. Careful not to overcommit. Careful to factor in the short-term value punch. Careful not to fade the top edge, because I've no idea where the top edge is. I've no way of knowing where the top tick price is. Nobody does. So based on that, I'm very careful to just be mindful of the fact I don't want to be the guy that tries to call the highs. And then I just roll the price round. I just wait for it to roll round, and then I take advantage of it. Not selling down here, but selling at a good price up here. So it's not too early and it's not too late. It's a bit of a Goldilocks, isn't it? It's just about right. It's just about right in terms of trade execution. I can still pick up the main elements of gaining this move because I've got the liquidity coming in. I've got a vacuum below me here that I can take advantage of, popping a vacuum trade in. I've got a big move until I hit the 90. I've still got a bit of space here, but by the time I hit 90, I'm still $200 in profit. The value looks good, developing storylines. It's just a good, easy trade. Whether it turns into be a big winning swing or not doesn't make any difference to me. I'm not in it for the big winning swing. I'm in it for the small break-even stops. Big difference in the way you trade, isn't it? When you start breaking even on a more regular basis, well, that's all we're trying to do, guys, is break even. And on the odd occasion, catch the breakaway trade, catch the big breaking move. That's what we're focusing on this year, focusing on in next week. When we get back in on Wednesday, we can start focusing on finding RGLs, starting with the main ones. The main RGLs of the day, the obvious ones, cash opens, cash closes. I mean, the good thing about RGLs is you can find the ones that are relevant to your time frame according to where you're located, of course. There's going to be some RGLs that are more particularly of interest and accessible by you than other ones. And therefore, you focus on those ones. For a lot of you, the best RGL is going to be the cash close. For a lot of you, that's cash open. It's still an RGL. It still has a reason to exist. It still has the same reason why we're very, very keen on it. And that's what we really want to focus on for the beginning of next year, because we really want to get into this idea, don't we? We want to get this storyline squared away for everybody that's trading. That the most important thing is finding these arrival rates, being able to then start predicting what's happening inside the arrival rates so that we can figure out as early as possible what we should be doing at whatever price is now available to me to do it. Make sense for next year, guys? I hope so.